Hazel, and my student number is MY82228, and we're going to implications of international accounting in Australia after IFRS period, and our group is S27. This is our group number, and we're going to start from 5 parts of the infection, and my part is the impact of the IFRS of information. The IFRS have a negative effect on the information cost, while it has the positive effect on the information use, and we can look from the local standards and compare with the IFRS, and as a consequence it is more frequently used on the investment. Thank you.
My student ID is NHE3068. I'm here to talk about admin and accounting changes. So complying IFRS standards, no number of significant changes in our way of accounting department and its effect. The accounting department collect, classify and present the financial statements. So biggest change to adopt and follow 2 distinct exclusive guidelines for the Australian entities, as they require to use GAAP and GAAP guidelines to the report to Security and Exchange Commission. So reporting and accounting such as inventory must be separated into different standards because different valuation results in different net income and expenses under either set of circumstances. So as I stated earlier, FASB working with IASB to create a convergence of both sets of standards. Current joint project is being addressed in FASB and IASB, including projects related to leases, revenue recognitions, financial statement presentations, fair value and measurements, and statement comprehensive income and financial statements. Yeah, thank you.
My name is Wei Rong Liang, and today I want to talk about disadvantage and advantage of adopting IFRS. The first of all is the advantage of adopting IFRS. First one is it's beneficial to new and small investors. IFRS can help companies by making financial reporting to become simple and have better quality. It also can reduce risk for investors when they are trading. The second one is greater comparability, because a company use the same standard to prepare financial statement, so it's easier to compare the same industry. It's also useful to compare different countries. The third one is create more flexibility. Company use IFRS is more freedom to specific situation. It's easy to read and useful. The next one is disadvantage for adopting IFRS. It costs high, no matter small or large company. If a company use IFRS, it can feel impact to cost high. However, small company, they can not have enough resource to train staff or hire accountant or consultant for assistance. Also, IFRS not global accept, for example, like United States. So these countries have to making 2 sets of financial statements.
Hi, my name is Mohammed Umar and my student ID is FTC2071, and I'm here to talk about the IFRS effects on the assets and inventory. As we can see, IFRS presents significant changes on the which could really lead the business on the assets and inventory. For example, the lost in and first out is prohibited by the IFRS, and also the recorded inventory cannot be reversed, which could really change the business environment. Also, the depreciation of the component must separate from the depreciation of the equipments. Also, as we can see, there are different revenue recognition principles of IFRS, which are pretty simple and straightforward, as the IFRS define revenue as a gross inflow of economic benefit, not the direct equity contribution of the owners, which could lead the businesses to change the whole model of their business when they are switching to the IFRS. Thank you.
My name is Fawaz Iqbal and my student ID is FTC2095. I'm here to present impact of IFRS on financial reporting. The major work for IFRS is to create major differences, like what are the major differences while we are using local standards and when we apply IFRS. The first thing is nature of expenses, how we have to change the different natures of expenses, how they mention in the financial statements. And the other thing is mention specified period of time for each item we mention in the financial statements. And the other thing is different way of classification. We have to classify each and every expense and the other things we are mentioning, and that's how IFRS affect the financial statements. And the other thing is IFRS effect on capital market. The first effect on the capital market is it stable the operating conditions of financial capital market, and the other thing is it lower the cost of capital. It attracts to achieve different kind of investors attraction, and the thing is it helps to manage the liquidity of company. It attracts it increase the credibility in the market for the businesses, and that's how investors and the credit institution give the credit to the companies. Thank you.
As we conclude, it will have IFRS will have a big effect on the companies and from all the aspects to the companies. Thank you.